What is up, everyone? It's been a long time. Hopefully, you guys had a fantastic Thanksgiving holiday. Not much happened on my end, just a lot of work, and but it had a little bit more downtime than usual. And so I'm excited to be back and up and running. Welcome to another edition of our Friday market update. Every Friday at 12 o'clock Pacific time live, I go over several things. One, any sort of headline articles that are happening here within the Bay Area, what's happening on a macro level from a country perspective, but also giving you an idea and the glimpse of the actual data itself in terms of the activity, in terms of prices, of what I see happening as we move on to the winter time. So it certainly has been a very different winter than in the past. It certainly has been very busy, and you'll see why. However, some of the first things we'll go over is the headline articles. Bay Area stays uncontested epicenter of nation's priciest homes amid pandemic. Atherton, most expensive zip code 4 years in a row. There are 6 of the top 10 zip codes are in the Bay Area. It's been amazing to see. Absolutely just incredible. And, we always keep hearing people are leaving the Bay Area. People are leaving. I mean, there are people leaving for sure. I'm not saying there isn't, but there's a lot of people that are still moving from different parts of the Bay Area to other parts of the Bay Area, especially if they have money. And given there's so much activity happening, I mean, millionaires are getting minted, as we speak, with all the IPOs coming, with a lot of biotech doing very well. Just regular people in big tech have done very well. So it's just really incredible to see. And once again, Bay Area, 6 out of 10 most expensive zip codes. And it's not changing anytime soon. Okay, let's take a look at some other news. So I've been saying this a couple of times in terms of what is actually happening with some other companies. A lot of the other companies are using this as an opportunity to just cost cut, right? They've seen the levels of certain things in the past, and these companies are great companies on one end, but they're not, quite frankly, doing that well relative to a lot of big tech. They've always had recruiting challenges. And so while HPE is a huge company, they are moving their headquarters from Silicon Valley to Houston. I suspect a lot more of these, I would say almost like legacy type of tech companies will make that move because they can't really compete in terms of talent typically for workers. And so they need to cost cut so it looks better on their balance sheet, looks better from a stock perspective. And they will certainly move to places that are lower tax. However, it's also important to understand, like this is the headline article, but let's take a look in and let's take a look at who is actually moving to the area. One of the things that I found here says a couple of different things in the headlines. HPE said its move wouldn't result in any layoffs. Bay Area employees could voluntarily move or remain in San Jose, which will continue to be the company's technical hub. Non-technical corporate jobs, including human resources, legal, communications, will relocate to Texas. HPE plans to consolidate offices in Milpitas and Santa Clara into its San Jose campus. If you guys know where the San Jose campus, I believe it's the one kind of close to Alviso. Polycom is there. They have a few, like those are newer buildings. So there's something to be aware of. Like even though they are moving their corporate headquarters, most of their move is for these non-technical corporate jobs. But if you're an engineer, you are still likely going to be here, and it's still going to be the recruiting hub for technical. Something very important to understand how these companies move is not all of their engineers are moving or would want to move. And this has been going across the board, right? Non-technical corporate jobs have always been outsourced to Texas, right? While they have moved, you can see as of 2017, the company had already 3,000 employees in Houston, and that's already the largest employment center. So on one end, the move catches a lot of headlines. On another end, they've already been expanding there. They've already had a lot of people there. They will move like some of these other trades that are non-technical, but technical people, quite frankly, the higher paying ones are still happening here. So it's just interesting to see, but something just to keep an eye out for. I wouldn't be surprised if more did that. Next, California needs more homes built. Google and Facebook are betting on this modular housing startup. company called Factory OS has raised another $55 million from amazing tech companies here in the Bay Area. And a lot of this has to do with what's interesting is because Facebook and Google have such a big presence here, they have allocated and budgeted billions of dollars to create and to provide for these types of companies, whether it's nonprofits, to ultimately build out more projects. And so modular construction has been going on for some time now, but it hasn't been to the scale that people have hoped. And so hopefully companies like Factory OS and other companies can really help lower the cost of construction as that continues to increase over the years. Next, I've been harping on this, and this is fairly being missed, right? Everybody knows about Bay Area. Everybody knows about technology. If you follow what a lot of big investors are thinking is biotech may be, I don't know if it'll be the same kind of wealth distribution that engineers get and data scientists get from tech, but they will certainly be very, very big companies, and they will certainly create a lot of employment, a lot of jobs. And what people are not seeing as a really big bull case, I suspect San Francisco will continue to have challenges. However, South San Francisco, I suspect, will continue to boom. And as you can see recently, and I'll show you later, Genentech just got an approval to expand their South San Francisco office. Why do you think they're expanding there? And they're not expanding to the East Bay, right? Where it's way cheaper out there. Watch what these companies are doing and how they think of their corporate real estate portfolio. Follow the money, right? I mean, we all hear about work from home indefinitely. Ask many of your friends that are in biotech. Ask them, are they already in the office? I know most of us in tech, we have the luxury to work indefinitely from home, potentially. Not even all the way true, but some people may have the option. But a lot of people in biotech have already been in the office. They've been in the office a couple times a week. And so hence why Genentech expanded and got the approval, and they're going to expand a lot of space. So as you can see, they're going to expand over 4.3 million square feet in the area. And what's incredible to see right now is the vacancy rate of these kind of labs are incredibly low, right? While commercial real estate of just regular office space is not doing well, these specific purposed ones are incredibly hard to find. Ask anyone that you know in the industry. It is super difficult for them to find these types of properties, and to build it out, it'll get moved in record time. So really interesting to see. I think that's a very big catalyst that people are not factoring in just yet, which is the massive biotech scene that's not just in South San Francisco, happening across the peninsula. Hence why I think the peninsula will continue to do very well, just because of its location. So this is Genentech getting the green light. You're going to add 4.3 million square feet over 15 years. They are certainly not going to they have about 10,000 employees in the Bay Area. They have 700 open positions as we speak. It's going to be incredible to see this development. If you haven't, drive by there. It's really cool. Like, there's just so much construction and just so much out there. And it's a very small space. It's not like that much more room to grow. So I suspect it will be continue to overflow out. Okay, let's talk about the macro level. So macro level, the Federal Housing Finance Association extends their foreclosure and eviction moratorium to January 31st. This is going to be almost a full year now that it's been extended out. For those that are trying to hope for it, even though the numbers have continued to drop in terms of those that might be possible for this, it's just so much support. So it's really difficult to see when this may end. Like, the government does not want to see what happened previously in 2008. So for those hoping on it, maybe wait a little bit longer. I don't know the result of it, but they just keep extending it out. Now it's another month out. What's really exciting, though, is the FHA raises loan limits by nearly $25,000 for 2021. Actually, in the Bay Area is even higher. So in the Bay Area right now, you can get an FHA loan, which is basically a 3% down loan for up to a purchase of about a little over $765 if you include like the 3%. So this is the loan size of $765. However, for next year, they've actually increased that amount to $822. Right? So actually, people can afford even more now if you just put 3% down. So really interesting to see that they actually increased it quite a bit. That is, was that $60,000 $57,000 increase for really a lot of first-time buyers can leverage. So if you thought it was competitive in the past, don't be surprised if this moving forward, given this increase, so that people can use just a 3% down program. One of the things that I've noticed as well that you will see yourself is condo sales have actually rebounded as buyers snatch up deals. If you've been monitoring and just watching my show every week, you've been able to see like condos have been relatively flat throughout the year. Single families have been really competitive, right? It has been a continued increase. But as condos have been lower and it has been really stagnant in price, remember, interest rates have dropped. And it's a very notable drop. So your borrowing power has been much higher given the prices have remained flat. So a lot of people, whether it's buyers, whether it's investors, are looking at this as a tremendous opportunity to be able to get into really good locations, because that's where most of these condos are at a reasonable price, given how low rates are. So it's interesting to see. I'm going to show you some data of San Francisco. Things are changing in San Francisco. You may think it's keep going down. I may have thought it was continue to go down, but the data does not lie. So it's really interesting to see that. Now, next, new home sales juggernaut continues. More sales means more construction, means more sales. It's incredible to see what's been going on for new builders. Like I have several clients we are in contract. So some of them unfortunately have delays. However, they're also letting people book pretty far in advance, depending on the community. There's this one client that I have that we're buying in Hayward. We are able to reserve it 9 months out for a home. Like crazy, right? Absolutely crazy. That's so far out. Like who knows what interest rates are at that time, right? But it doesn't matter in a sense. At least we're able to get it so the search can kind of end for finding a new home. And then there's some, the majority are maybe only 3 months out, but they're selling as fast as they put it up. And generally, most places will have very little discounts. However, I can still help you, at least give you my thoughts, try to negotiate on price, give you my idea of the resellability. That's incredibly important that people are not understanding. There is no value of going in on your own. You're not going to get a discount. Let's just call it what it is. There is no discount for going on your own. You might as well get represented from someone that does a lot of business like myself. At the same time, it's also important to understand, hey, look, is the one that you're buying, what's the resellability of that? Like, is it a popular model? Will it do well in the future? I will tell you that because I'll show you comps. I'll show you kind of the trends. I see houses every single day. And that's something also important to understand, like from a resellability perspective, how does this look? Are you overpaying for that kind of property today? Will you get more money back potentially in the future? So some things just to consider, even when you think about new homes. You can reach out to me. Happy to help schedule and go with you and give you my thoughts. For the most part, I've toured most of the new construction houses all over the Bay Area, and I know what's coming. Check out my Bay Area city developments as well. So you can see for yourself the general like 10 to 15 year plan that is out when it comes to these cities and what's upcoming. But they are selling very quickly, so just something to be aware of. Last but not least of the general news, home prices see greatest gain in over 6 years. Share this to all your friends. Anybody that is thought that we're in some sort of meltdown when it comes to real estate, we've seen just incredible growth. Many factors. We've seen the acceleration of people going from the rental market to the homeowner market. We've seen a decrease in interest rates, a significant decrease in interest rates. We have seen a tale of two stories, right? Especially in tech. Look at most stocks in tech. They have been higher than they have ever been in history. They have all-time record highs, right? So those in tech, I just listened recently to a lot of VCs, and they've said the acceleration for SaaS companies have never been greater. Everybody was surprised, but it's the reality. Look at Zoom today. Look at their evaluation. You may be saying, hey, look, their evaluation is high, but look at the revenue. I think they're at a 3 billion ARR figure at this time. Just incredible. And a lot of it is not just enterprise. A lot of it is consumers that they never targeted in the past. So it's just been an acceleration of tech companies being able to do phenomenal. And so, especially here in the Bay Area, that is where, a lot of people are buying. So A lot of reasons, right? They're not traveling anymore. They value the home more than ever before. They need more space. I mean, I don't see this changing for 2021 by any means. And winter typically is, traditionally the lowest prices of the year, but this year a little bit different. But that's just the reality of what we see in the market today. So let's take a look at the data itself. I mean, just really low numbers, right? If you think about how many new listings are coming on the market. This is San Mateo County. Let me make it bigger for you guys. So this is San Mateo County. Man, really no low amount of new inventory come on the market, only 110, which is about, if you look at it just in the past couple of weeks, about 30-something% drop. Still more contingent pending than before. Very few that are lowering their price. So just really interesting to see. Now, November, single family wise, though, has been about the same as October, right? But if you compare through the year, I would say it's relatively flat. It just depends on the property that you're looking at. I would agree that in general, there's certainly less competition in San Mateo County than before. However, things are still moving very quickly. I wouldn't look at the December numbers just yet. I just have it for now so we can see in the future. But we're only like 3 days in, so just not a lot of data points to go by. But we will look in November because that has closed. So if you look at November-wise, it's been relatively flat through the year. Has dropped a little bit as well. So I think a lot of it just has to do with combination. If they're going to spend about $1 million, would they spend it in San Mateo County for a condo or go a little bit further? So that's San Mateo County. A little bit weaker now than it was certainly before. Let's take a look at Santa Clara County. I mean, look at these figures. We have, that's also about 30% less inventory than there is before. So only 264. 289 when contingent pending, so still more than there is that are on the market. This number, I'm sure, would have been higher if there was more properties for people to choose from. You can see the imbalance is happening every week, right? It's basically shrinking and shrinking inventory. There hasn't been in a long time, since mid of October, that it was kind of somewhat balanced. Every week since has been an imbalance of more contingent pending that week than there is new listings. Let's look at price-wise. Price-wise, a very different story in Santa Clara County. You can see actually November is record highs. All-time record highs. So this is higher than it was back in 2018. Just incredible to see single family, very competitive, very bullish here because of all the big tech companies are still continuing to expand. Look at condos, townhomes. Also, if you look at the over the year, still an increase, right? So this has a little bit different story. It's not as steep or as increased as you can see here, which is a higher gain, but still increasing. So certainly people have wanted to live in Santa Clara County, find condos and townhomes to settle down in. Alameda County, November-wise, has been a little bit lower than it was in October. However, higher than about the same level as September. Excuse me. December has been, obviously it's just got started, so not much to share there. Condos, townhomes, very similar effect, not much to report. Slight increase. Okay, Contra Costa. So I need to certainly just look into this. I wouldn't take this too much for whatever reason. I bet probably someone had actually inputted the wrong figures, but you can see, at least from the previous chart, similar result as Santa Clara County, hit all-time records in November. Very popular area because you get a lot for your money out in that county. Let's take a look at San Francisco. We haven't seen San Francisco in a while. And so I'm always curious to see what the average result is. So if you look at the end of November, the average price per square feet is about 1,004, which is about the same as what it was over the last couple of months. But the average price has actually been higher than it was over the last few months. So single family has still been very competitive. You can see the number that has been sold, the number that's active versus the number that's pending and contingent is not as imbalanced as the other areas, but they're still moving pretty quickly. It's not as competitive. Look at condos and townhomes though. This figure, if you looked at the reports that I had in the past, the highest was about 13 or 1,400 listings that are active on the market back in just a couple of weeks ago. So the number has dropped pretty significantly. And the pending contingent numbers have actually increased. You can see November 318, about what it was in September, but higher than October, higher than the previous months too. And you can look at the prices, like prices have not dropped. The average price per square foot is roughly the same, but the average price have actually increased than it was in October. So we're not seeing a decline downward. So really interesting to see. I think, it'll be interesting to see because now San Francisco is back in lockdown. There is no more outdoor dining. They have a lot more cases now. So it'll be interesting to see what happens if people will take this as an opportunity and want to move in at this time, or if you'll see a decline for that reason. But a little bit different than what people may think. It's not a very straightforward trajectory, right? The biggest challenge that people have is there are price decreases, there are opportunities, but there's not too much motivation for these people to want to sell. I mean, think about these people. They are working in tech. They are probably working remote. So their job has been pretty much secure and fine. So there's not much motivation. So it's interesting to see what's been going on with the San Francisco market. Not as big of a decline as one may think. Marin County, though, the data is a little bit different. Let me actually, I'll rerun this. I think this is a little bit off. I'll rerun this, but it gives you an idea in general. Like things are still moving pretty quickly. I don't suspect December will have much of a increase. I think it'll be relatively the same though, which is different than most other times in history. If you looked at the past years, generally wintertime are lower prices, but this time it's still relatively flat. So I'm suspecting it still is today a pretty busy winter. People are not going anywhere for vacation, so there's not much of that excuse to be not around. The kids are learning from home, so there's good amount of flexibility. They don't have to really pick people up, and so I suspect winter will continue to be very busy. Like this weekend, I have maybe 8 clients that I'm looking. We're going to go tour houses, so it's still very busy. I think it's going to be this busy until about Christmas time, and then there'll be like almost no listings. That'll be really interesting. And then we'll be back up for the new year. And with all the vaccine news, all of the things that are still happening, I suspect a really, really busy 2021. So anyways, I hope this was helpful. I'm glad that you tuned in to get the market update to see what is actually happening. If you or anyone you know is considering to buy, sell, or invest in the Bay Area, please do reach out. I would love to have a conversation with yourself. We can go over your strategy, go over your plans, answer any questions that you have. And then from there, we'll figure out the next steps. Well, I hope you enjoyed this latest Friday market update. Have a great weekend, and I'll see you at the next one. Bye now. Thanks for making it to the very end of my YouTube video. If you like the content, please hit that subscribe button. Make sure you hit that little bell as well, since it'll give you notifications of when my next episode is. If you know of anyone that is considering to buy or sell a home here in the Bay Area, I'm never too busy to help more people. Always welcome to have a conversation, regardless if you're ready to go right now or if you wanted to buy 5 years later. Click on that calendar link, and then you'll be able to book an appointment with me and love to have a conversation about your situation. In the meantime, I also do have a monthly newsletter, so feel free to hit that link below, and then you'll be able to get my updates, personal updates that I write once a month in terms of what is going on with the market and some of my latest activities. Hope to see you at the next one. Thank you.